Small cut, but big market reaction. Why?
Yeah, you're absolutely right. Barely noticeable, I think, in terms of actual production changes. As you say, they're just about a minute and a half worth of global oil demand being taken away from markets in October. So it's a kind of blink and you miss it change. But I think, as you say, the big takeaway from this is that OPEC is going to be much more responsive in terms of protecting the downside for prices. We had the verbal sort of intervention from the Saudi energy minister towards the end of August, saying that there was a lot of downside volatility and that OPEC Plus had the tools to protect against that kind of volatility. And that was pretty clear in the statement that we got yesterday, that they don't want to see this kind of what they're describing or what they're feeling as a kind of disorderly sell-off downward in terms of prices, that they will move and step in to support the market if it's coming off too much. Could we get bigger cuts down the line? That's certainly possible if the economic outlook starts to deteriorate even worse than we've had over the last couple of months, and you start to see oil prices going lower again. So they could intervene with a more meaningful change, say signaling, say, a 500,000, 750,000 barrel a day cut. That would be probably much more noticeable and much more impactful in terms of supporting markets.
Absolutely. I'd be curious to know what the catalyst would be, though, because when you look at the backdrop, and in particular the politics here, Ed, this decision to cut comes just weeks after we saw Joe Biden meeting with MBS, the US continuing to push for policy output increases from the United States. And at the same time, we are seeing the energy crisis deepen in Europe, this G7 plan to put a price cap on oil, the EU embargo on seaborne crude also coming in December. Is OPEC basically laying the groundwork for a policy pivot here?
Well, it does look like they might be reflecting the fact that oil prices have come off so much in July and August, and that's for retail consumers as well. So gasoline prices in the US have been coming off. So there might be, from their point of view, a little bit of room for them to be able to cut production and help to support the wholesale prices that the economies here are really dependent on. I think going forward, they might not be paying so much attention to the sort of political needs of some of the G7 countries necessarily, when there's a lot more uncertainty about the trajectory for oil prices going into 2023. Now, we do expect that balances are going to be tightening much more severely, particularly from December onward, when those EU sanctions on Russian crude oil imports come into effect more concretely, and also into Q1 when we get the prohibition on imports of refined products. So going into next year, we could be facing a much tighter oil market that should support OPEC keeping its production targets relatively steady and helping to support oil prices going into 2023.
Just bringing it back to what we're talking about over the last day or so here at Gas Tech, I have to ask you about the American response here. It's something that Dan and I have discussed many times, and he mentioned, of course, U.S. President Joe Biden visiting Saudi Arabia, for example. Yesterday, in a couple of panels that I did focused on, rising oil prices, or rather I should say volatile oil prices as well as gas prices, it was pretty clear to me via the CEO of ConocoPhillips and others that there is still no real dialogue between the Biden administration and oil and gas producers in the United States. How much of a problem do you see that being as we move forward?
Well, I think there is this feeling of an antagonistic administration towards the oil and gas industry in terms of U.S. producers. So not really getting the priority that, why did you go visit Saudi Arabia when you could have been going down to visit the Permian Basin and supporting producers sort of domestically? You get the sort of the homegrown boost in oil production. And that's really, we haven't really seen a big surge in U.S. oil output this year, as producers have been focused much more on generating cash flow and doing well in terms of their income and their financial positions. So we don't quite have a necessarily positive or constructive relationship. There may be an element more where the oil story and Biden's visit to the Middle East region was seen as part of the kind of geopolitical change that we've seen over the course of 2022, where the United States and the European Union have been taking a much more antagonistic approach to Russia and its invasion of Ukraine. But that is sort of leaving U.S. oil producers sort of caught in the middle as to what's the direction that they're getting. There's obviously a need for higher oil output, but also a much more stringent regulatory environment in the United States, and not really one that's accommodative or welcoming to higher oil production.